Hey everybody, it's Tyson Strachan here on Monday, May the 6th. I was out last week. Johan did a wonderful job in my stead. Yeah, we were on a Disney cruise with my in laws, my wife's sister, and her little guy, who is just 6 weeks older than mine. So, two 3 year olds on a big boat that full of Disney characters and pools and slides, and you can imagine that was a lot of fun for the kids, a little bit of stress for us, but overall just a lot of fun. And then even more exciting news is Johan and his wife Caitlin got to welcome into our little hockey family their third child, Hank Christian Kroll, a little boy, came in at 7 pounds, 15 ounces, 20 and a half inches on Friday. And everybody seems to be doing really well. His big sister, his big brother seem to be taking it in stride and being really good siblings to him. So that was fun. But being out last week, I did miss a very busy week full of economic data. I'm going to try to run through. So the week started off kind of tough, just in terms of the markets kind of going up and down leading into the Fed meeting. Fed Chair Powell came out with his typical, um, kind of politically motivated the way that he answers everything. He never really gives too much away. But in a way, he did kind of admit that he was wrong by just basically about the timing of rate cuts. A quote was kind of, I am less confident now about the inflation dropping down to 2%. So I guess that's a way of saying that he was wrong. But he definitely did, um, in a way, look forward like rate cuts are still coming down the pipe, but probably later in the year. So we saw consumer confidence numbers down quite a bit year to date. The JOLTS numbers came in on that 12-month data down a lot as well. So again, primarily weak economic data, which at this point in the cycle is actually a positive thing. Um, because in a way the totality of everything basically increases the probability of what Fed Chair Powell's continued to say, which is kind of cheesy, but the soft landing. So the probability of a soft landing, is growing with kind of what we're seeing with the data. And now most speculators are pricing in a 25 basis point rate cut somewhere later in the year. It seems like maybe September seems like a probable time. But again, if you go back, to Q4 of last year, we would have thought that by May, the fifth month of the year right now, we would have already been seeing rate cuts. But yeah, seeing the jobs numbers, just all of these different, the consumer confidence, everything that we're seeing, we're kind of seeing that economic cooling that they have been hoping for. So as we continue to say, data dependent as it goes, but the Fed is holding that card in their back pocket that they can pull out and start cutting rates anytime that they think that, inflation has really cooled, they have that under control, and they start seeing the economy, really cooling down. They can kind of slowly trickle that down. Um, with that, the 2 year treasury last week, sorry, dipped 19 basis points. So that's just in step with that previous data. And then also the Fed announced that they are slowing the pace of reducing their balance sheets. If you remember, months ago, they came out and said that they were going to, um, at a pretty fast pace, reduce the balance, their balance sheet. So they have reduced it now from 9 trillion down to 6.5 trillion, at basically a pace of 60 billion per month. They are reducing that from 60 billion a month to 25 billion a month. So really slowing that down a lot. So continuing to reduce that balance sheet, but at a much slower pace. Again, so much data last week. Tough one for me to be on a cruise with bad Wi-Fi, but That is what we saw. And this week, we basically get a break out of the economic data. Not too much coming down the pipe this week, but kind of seeing markets already this morning jumping up a little bit. As we said, this kind of bad economic data almost is a positive market wise. So it'll be interesting to see how things go forward. I hope everybody has a great week, and we will talk to you next week. Bye bye.